Indicators feel safe. They give you a signal, confirmation, a trade, and it feels like they're doing everything right, and that is why so many traders seem to rely on them. But in this video, I want to explain to you why indicators do not fix your trading, even though they seem like they are. Now, don't get me wrong, this is not an anti-indicator rant. It's about solving the real problem indicators are trying to fix and why they're failing so much. I ran customer support for a trading indicator company for 5 years. I spoke with every kind of trader possible, from the brand new guys just starting out to a seasoned veteran who's been in the markets for over 30, 40 years. And what I saw was a number of traders all trying to do the same thing, and that was try to optimize those settings to become a profitable trader and find that edge. So believe me when I say what I'm going to tell you now isn't based on theory. It's from real life experience. Indicators don't fail because they're useless. They're just trying to solve the wrong problem. Trading isn't a signals problem. An indicator problem is not a signals problem. It's a decision-making problem. So let's go to number one. Indicators give you that illusion of certainty. Indicators feel objective. Numbers feel safe. So when you have a number of indicators all lining up at once, you're effectively trying to stack your assurance on that potential trade. But indicators don't reduce that uncertainty. They're hiding it. That's why traders will hesitate. One more signal, one more alignment, one more confirmation, and by the time that trade is ready to go, it's already gone. It's been and done, and you've missed it. Or worse, you get in late. And where things go really wrong is that some traders try to rely on the indicators purely as their strategy alone. Because if you're buying an indicator just because you're looking for reliability of a signal, and you're going to take it without getting into any context or true understanding of what's going on in the markets, then that's not really a long-term solution. There is no indicator in the world that is a guaranteed winner if you took every signal. If there was, one, everyone would be using it, and so the liquidity would be going through the roof, or two, no one would be selling it, and they'd be trading it for themselves and keeping the money. Your indicators need to support your strategy, not replace it. So let's go to number two. Your indicators lag your decision points, L-A-G, lag. Now, people are constantly saying that indicators will lag price, but that's not true. What they're actually doing is they're lagging decision points. Price has already moved, structure has already changed, context has already been set in the markets by the time the indicator is coming around to realizing what's actually happening. That indicator will be reacting after the fact. See, it doesn't have a crystal ball. By the time it's worked out what's actually happening, if there's a breakout, if there's a reversal, it's realizing too late. That reversal's already happened, that breakout's already happened. It doesn't see into the future. So the indicator's just not wrong, it's just late. So let's go to number three, and stacking the indicators is a massive thing that I saw constantly. Most traders will not just use one indicator, they'll use several. For example, they'll use a MACD with an EMA crossover and look for an overbought or oversold zone when price is above a specific EMA. But when those indicators don't agree and they don't line up, something happens to your decision making, and that decision making breaks down. So instead of looking at the markets and reading price action, traders will start to cherry pick what signals they're receiving and look to try and take the wrong trades just because they're thinking they need to be in a trade. But don't forget, if you're looking at your markets and you're seeing these indicators stack up and you're saying, well, it worked, I saw that trade happen, but it was a rarity. Don't forget that even a broken clock is correct twice a day. So when you try to repeat it, it's often going to fail considerably and regularly afterwards. So that's not systemic trading. That's outsourcing your responsibility. So the more indicators you start adding to your charts, the less accountable you are to your own decisions. We're going to reason number four. So it encourages, using indicators encourages you to strategy hop. So indicators generally promise optimization. So when a trade fails, the conclusion isn't, well, my decision was wrong. It's more like, that indicator needs tweaking. Its settings need changing. And what that does, it creates an endless loop. New settings, new indicators, new name, new guru that you're spending a ridiculous amount of money trying to copy his trading. And eventually traders will move on to someone who's got much better marketing. Flashy results, Telegram channels, Discord channels, copy trading, indicators, trade live with them. So people are jumping from indicators to ICT to smart money concepts to price action, but never really committing long enough to properly find that edge in the markets. So if you look at consistently profitable traders, the boring ones, the one thing they'll say to you is they found one approach, refined it, and traded it and traded it and traded it. If they have that edge, they're going to keep taking their profit. Because the real issue here is indicators are reactionary. They don't teach context, location, intent. They react. They're not interpreting. Your trading will improve when your decision making improves, not when you've got another indicator added to that stack. For me, this is why I focus on structure and patience with my trading. I've built tools and processes to slow down my decision making, to reduce the number of trades that I'm taking, not replace it. I still wait for the right setups. I just don't trade every day. I built Spidaro purely so that it gives me that patience. I'm looking for the right movement, the right change in price action, and then Spidaro can give me the entries and the stops that are more synonymous with the strategies that I'm building. You can back test for months and only find a handful of trades, but if they're all winners, well, you've got a high win rate and you remain profitable, and that's your edge that you can continually doing day in, day out, month in, month out. That's trading. That's profitable trading. So just to close this out, okay? If indicators worked the way that traders and marketers make you think that they can, no one will be looking for another strategy. But just remember this, the edge in trading is through better decisions, not hidden inside a tool. Hopefully that's useful for you guys. If you want to know more, please feel free to put a message in the chat. Don't forget to like and subscribe. If you have any questions, you want to see more content like this, let me know. Happy to do that. Thanks very much. I'll see you on the next one.